Good afternoon, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, arbitrage opportunities come in various shapes and sizes. So, as a rational trader, one concept that I utilize constantly, in fact, it really is the core principle of rational trading, and that is to exploit arbitrage opportunities with the premise that markets are inefficient, and now those inefficiencies can correct quickly, but generally speaking, markets are inefficient. And so, as I begin my trading day, I'm always looking around different macro uh, indicators, look at different pieces of information in order to find market mispricings that I can exploit intraday trading. Now, one of the four pillars of rational trading is to utilize the moving average. So in today's arbitrage opportunity that I identified this morning, you can see here that the NASDAQ has been on an incredible run. Uh, the bottom red line here is the 50-day moving average. The top red line is the 200-day moving average. And now several days, the NASDAQ is trading above the 200-day moving average. In a very healthy bull market, this number about 1,000 points above the 200-day moving average is right around the ceiling. We can get anywhere between 1,200, maybe 1,300. In extreme cases, maybe 1,500 points above the 200-day moving average under the right circumstances. But obviously, there's really no arbitrage to be found here with the NASDAQ. So take that now to the Russell 2000. Wow, that's a completely different chart. The Russell 2000 has been doing well like the NASDAQ, but not nearly as well. So the small cap indicator, or index, the Russell 2000, is trading above the 50-day moving average, but below the 200-day moving average. It's right in the middle. And so right there, the green light go sign is flashing. Avoid technology stocks today. Look for an arbitrage in the Russell 2000. Now, one other item, the yield curve is also a pillar of rational trading. And this morning we had key economic stats that I thought the bond market itself was acting inefficiently when PPI came in very, very negative. A deflationary bomb is going off, and the 10-year Treasury, which had been trading at 451 pre-market, dropped down to 449. A very, very tiny move considering the big, really miss on PPI. Now, falling rates are extremely bullish for small cap stocks. So now I've got a couple of really strong data points telling me that there's an arbitrage opportunity in the Russell 2000. And just prior to the market opening, you had the IWM, which is where I was going to trade this arbitrage. You had the um, futures were pointing to a minus 10, maybe minus 15 basis point open for the IWM that really dissipated immediately. So I just took a deep breath and waited for that arbitrage that I had seen earlier to materialize, and it did. We ended up entering this trade in the IWM shortly before the top of the hour at 206.08 was our entry. So that was a really good entry, which, by the way, when you're exploiting these arbitrage opportunities, you're going to be entering anywhere between immediately at the market open or 30 minutes, up to 30 minutes after the market opening. And so that's what we did today. Now, again, the arbitrage didn't correct immediately here. So, and in fact, for the first 30 minutes of trading, we were wrong. But I knew, the analysis, again, was correct. And so I had a high degree of confidence that this arbitrage was going to correct at some point. And eventually, with the yield curve, the 10-year dropping to, I believe, yeah, now we're at 444. And so right around here, it started falling from 449 down to 445. That brought the buyers into small caps. And we had at 207, let's see, we exited at 207.29 for a 60 basis point gain. So correcting that, identifying that arbitrage, correcting that arbitrage. And again, every day there's going to be a different arbitrage. But the four pillars of rational trading were designed to help you triangulate, again, market data with opportunity, and away we go. That's all I have for today, folks. This is JD for The Rational Trader. The podcast comes next, the next video for The Rational Trader, then it'll be on Monday. Take care, everybody, and we'll see you next time.